Good afternoon. Welcome back. It's Monday, September 23rd. We're about 2/3 done with harvest on the farm. Got about an inch of rain this morning, so in the office for probably the first time in a good 3 or 4 weeks, where I actually have a little bit of time to kind of get my feet underneath me, figure out where I'm at. We're going to go through some break-even calculations today, or just use that as a launching off point to talk about what's going on in my feeding business. First thing I wanted to kind of pop up was I got about 6 charts here, and these seem to be the 6 items that I go to look at all the time to kind of get a feel for where the market is. First one being crude oil. Nice little bounce in the last week. Natural gas, same. Nice little bounce the last couple days. I find these to be good indicators of just the global economy, what's going on with, in the world and interest rates and all of that. Corn futures been pretty choppy, but still kind of maintaining a nice bounce over the last couple weeks. We'll go down here to live cattle futures. Nice little bounce. Feeder cattle, nice little bounce. Soybean meal, pretty choppy. Not a lot happening there. I just like to start there to have a little bit of context of, what's going on in the market. We're really starting to hear about new crop cattle showing up in the sales, better availability, better supply of prospects for feeder cattle and balling calves, which is where we tend to like to buy. So, we really want to start sharpening up our numbers to have a handle on, what are those margins looking like? Here's our break-even calculator. Here lately, we've been thinking a lot about what we're going to buy for next year. We got about 10 loads of fat cattle left to market out of our feedlot, and then we'll start buying again, which is going to correspond really well with the end of harvest and cooler weather, and maybe we can wait till after the first frost, and it seems like cattle health is better at that time. We've put up a lot of corn silage this year, which is not something we do all the time, and just had a few opportunities come our way on the back of some solar development in the area. We got to chop some corn off some neighbors' ground for pretty reasonable pricing. With all that silage in mind, we want to buy a light calf, something that we can just pour silage into for the next year. So we've been thinking pretty strongly about buying 4-weight steers and bulls. One comment, if you follow our Facebook page, I had a little write-up a week or two ago about, just seeing the commodity market selling off over the last 45 to 60 days, and what do we want to be thinking about with that? And I think that's a trend that's in general going to continue. I mean, the world economy is dealing with the hangover of just all this COVID money that got dumped on us. That was a worldwide phenomenon, and now it seems like we're getting back to reality here, and I just don't feel like $2,000 feeder cattle and $3,000 fat cattle is reality, or going to be reality over the next couple years. And maybe that's wrong, I don't know, but seasonally I feel like we're going to see the type of calf that we buy decline in price, and that's at least for the next 60 to 90 days. And the fat cattle numbers that we can hedge for next year are pretty strong, so we're just getting out there and going ahead and selling some fat cattle, even though we haven't bought the calves yet. I guess we're taking a chance, but it's not something that we're not accustomed to doing. So we've gone out and sold September, October, November of 25 fat cattle, and with truck freight and everything, we're just shy of $1.75 for fats FOB feed yard next fall. So we start to put together our three good, better, best scenarios. That's just how we do it. It gives us an idea of if we want to do something or not. You don't know if something looks good until you put pencil to paper. So in all three scenarios, we're looking at buying a heavy 4-weight steer or bull. Right now, those are probably costing more like $280 to buy the good ones in quantity. So we're just kind of on our good, better, best scenario. We're looking at how big can we get them. We want to get them as big as we can, but some of them just won't do it. So we're forecasting a 1350 outweight, which I'd be pretty disappointed in. 14 1/4, which seems about right, and 1500, which some of the good ones you can get them to do that, but to get 1,000 of them to do that in a row is pretty tough. So we kind of know what we're marketing against, or at least we do on what it looks like today. 3 scenarios for daily gain, 3 scenarios for feed conversion. We renewed our operating line of credit right before we start harvest, and let's see. Looks like that number for me is 6.2% for the next year. So projected dry matter feed cost. I've been doing a lot of work on this. 175 a dry matter ton seems to me like where it's going to be right now. For the next 6 months, we're probably not going to be coming across near as many bargains on feed as demand for byproducts is strong and gaining strength, and fiber, forage price goes up, and so on and so forth. So, we're using a combination of contracted feedstuff, silage, things that we can lock in, and then kind of making a guesstimate on those that we can't lock in. We've gone over this calculator enough to know, so we're looking at cattle that we're feeding for 300 days. We'll go down here and look at our net money. In the worst case scenario, we're only making $100, which is very poor over top of all our costs. But, in an average situation, we're making $225, which the number doesn't mean anything to me. The number that I look at is this dollars per head per day on feed, because that is the number that I can use to manage my overhead costs. We'll show you another time. We got a lot of investment going in at our feedlot right now, and making $225 a head don't mean much if it takes you a year and a half to do it. We need to normalize everything to per day returns. That's about just shy of a 10% return, which again isn't, compared to the inflation that we've seen in the last couple years, nothing really to get excited about. But in a good case scenario, you're talking 15% returns, which I'm very pleased with, and I think anybody would be. And I mean, I feel like we're doing a good job. In our yardage, we're charging ourselves 50 cents a head a day, which is going to cover a lot. Now, one comment that I do want to make, I want to go back up to the beginning of this budget calculator. Right now, a 475 pound steer and bull costs $280, but over the course of the next 60 days, I would really expect this to soften up just as quantity of them that are available increases, weather, and guys just get their belly full of calves to doctor on. You can only doctor on so many calves at a time, and it seems like, even in a year where the calf crop is small, there's still only so much doctoring a guy can do, so we kind of look for these to go down. I mean, we like what they would look like if we could get them bought for $265 this fall. That's going to get us up in a best case scenario pushing 20% return, and a most likely case scenario pushing 14% return, and we like that. That keeps us in business, keeps us going. Okay, so now that we've kind of looked at the market and kind of assessed the type of calf that we want to buy, I want to go over here to this again. I'm the spreadsheet master. I got a spreadsheet for everything, and feed is no different for me. It's a good way for me to organize my thoughts. So, I have this table where I have all my feedstuffs and the moisture of the feedstuffs and what I have either locked in, paid, or expect to pay for those feedstuffs for a given feeding period for a group of calves that I'm getting ready to lay in. I break it down to how many cents per dry matter pound do those feeds cost. Then I, just to visualize it, say, well, I'm going to start this calf on this receiving diet, then I'm going to transition him slowly to a growing diet, and then from there we're going to go to a finishing diet. And I just kind of put what percentage of each ingredient for each step, and this is on a dry matter basis. I just kind of see how that flows through the feeding period and what a nice smooth transition looks like, and it helps me identify where I might have shortfalls of certain ingredients, and it also helps me identify potential traffic jams around our place in terms of, hey, you got 2,500 tons of corn silage, but you're only feeding 900 tons for the year, and are you planning on carrying 1,600 tons of corn silage from one year to the other? Just stuff like that. But anyhow, I go down here and I say, well, I expect on a 4-weight bull and steer that I'm going to spend 30 days, where in that first 30 days I'm just so focused on getting those cattle healthy, and we're feeding, just trying to get their gut going, and I'm not so concerned. I'm much more concerned about health, and the gain will just come as a side effect to that. We're just trying to get the cattle healthy. We're feeding a lot of good quality dry hay, all dry mix. So we're saying hopefully after 30 days, and some groups will do it faster because they'll just come right on feed, and others they'll be on here for 45 days, and those will be the ones that we doctor on because the weather wasn't right, or we didn't handle them right coming in, or they got stuck in a sale barn or a truck, or just all the things that can go wrong. But anyhow, then I kind of figure when we start introducing silage and wet distillers here, decreasing the dry hay and increasing the wet feeds and the stronger feeds in a 3-step process to where we're really pushing that corn silage to them, because we got that corn silage, that's our most economical ingredient on the farm. So we want these calves to spend a lot of time just pounding that corn silage into them. So this is a number of days that we would spend on that ration. And then, we tend to put, feel like if we start transitioning them to the finisher and get them on a finisher for 100 days, man, they grade. We just don't ever have any problems with cattle grading. I would like a little bit of feedback on this, because since we've been feeding heifers, I've been a little disappointed with our outweights. I mean, they're not bad, 1350s, but it just doesn't seem like we can get them near as big. I mean, we used to be steer feeders, and we'd roll a lot of 1,500 pound cattle out of here, and I know the heifers just ain't gonna do it, but I don't know. I'd like to hear some feedback on this strategy. What we try to do is get them here on this final grower diet, and we just like to absolutely stretch them out. I mean, we want them eating, by the time we're done with this growing phase, when we're ready to put them on the finisher, we want them eating just as much dry matter intake as we can possibly get into them. 25, 26 pound if we can. I mean, just absolutely as much DMI as we can possibly get, and that's how we judge ourselves. When is it time to make that transition to the finisher? Well, we're not doing it until we can get them up there in the 25, 26, 27 pound of DMI, because if they're not eating that much, then when we get them to the end, they're not eating enough, and it seems like they stall out. The best doing cattle, seems like you build the foundation for how they're going to finish in this period right here. Really, this period is so important too, but just you're building your foundation here for what's going to happen here. Anyways, we kind of kick that down to we try to forecast how many pounds per day we think they'll eat in each given period, how many total pounds of dry matter feed that is for each period, how many dollars that is. And that's how we back into our, on our budget calculator, we got to pick one feed number, and rather than just say, well, corn's $155 a ton, let's use that. Well, we try to take a blended average of, how many pounds of feed we think will go through in each phase, and assess a dollar amount to that, so we can get a blended average dry matter feed cost to use in our budget calculator. I'm gonna email my nutrition counselors this and get some feedback from them. So, we're at the time of year where margins are starting to look better, more cattle are moving. Maybe next time when we come to you, we're going to show you some pictures of the feedlot. We got a lot of work going on out there after tornado, new fencing going in, new buildings getting built, old buildings coming down, and just a busy place. So I want to, if there's anything you guys would like for us to talk about on this, I'd like to hear about it.